Happy Wednesday. How you doing? All is good? Everybody's good out there? Appreciate you hanging out, watching the show here with us today. Sadly, there will be no show tomorrow. Right? Cody got the day off yesterday. I get the day off tomorrow. So just want to point that out while we're early here and getting started. We are financial advisors here at Jazz Wealth, and we are going out for business. Not going out of business. Going out for business. Did that trick you when you saw that? A little bit?
I know your trick. I know
you know the trick? That worked years ago. We tried that and it worked. So let's see what happens there. Who needs a catchy marketing ploy? Jazzwealth.com/2023 if you want the numbers. I see a lot of you emailing Haley to get that. Again, no strings attached. You're welcome to just have it. Something we were going to put together anyways. And just as a bit of a thank you for watching us and supporting us here, I do appreciate it. Let's talk about the markets here today. This will be a brief one today because the markets are in decision mode. That is exactly where we stand. If you are someone who wants to commit money to the market or are considering taking profits, dollar cost averaging, or selling some of your position in pieces, you have no good reason to do any of that. That's it. As simple as that. We had our big Fed talk yesterday. Not so much fireworks today. They came from yesterday. And now we're in what I'm thinking is this new range where we chop around in a wide range. It's going to look like we're strong for a while, then look like we're weak for a while we digest what the next big move is going to be and or head into and beyond the next Fed announcement. It very well could be. I mean, we'll see what happens, but you know, that's what we have there. If you look at the S&P here today, a bit of a non-event day. You can kind of scroll through the markets and see the same thing. That's Bitcoin. It did the same thing. You got the Dow doing the same thing. The NASDAQ up just a little bit here. Again, choppy kind of a range there. There's not really much to add there other than the NASDAQ. Still the best performing index year to date by a whole lot. 11.6% for the NASDAQ. The Russell trying to wake up a little today. I kind of like that more as a bottom than anything else, any other index, I should say. The Russell's up about 7% year to date, and at some point people go, okay, I know I can't go big tech, but I can go small cap. I could diversify myself in small cap and take advantage of that, and that looks to be what's happening at the moment. I want to point out the Dow is actually still negative year to date. That's not a big deal. It's not like it's sold off or anything. It's just inside of this range and happens to be at the lower part of the range right now, down 1% for the year there. So not too big of a deal. Sector-wise, nothing like yesterday. That's a good thing. If you look across the sectors of the S&P, remember there are 11 sectors. You got a 1.4% gain in real estate. It's trying to find its way. We're still trudging below this big longer-term downtrend there. I won't draw it out for you, but you get the gist of it. You got tech moving a little bit higher today, and not too bad, actually. Semiconductors did the heavy lifting. So inside the tech sector, you got NVIDIA continuing from its earnings bounce there. Texas Instruments all trying to wake up just a little bit. We own AMD, so we're happy to see that waking back up again. Broadcom's another one that is almost about to hit new 52-week highs. Other than that, sort of a Christmas tree type market today. If you had like a heat map or something, you'd see a lot of red and green, no real consistency there. Aside from real estate and utilities, they were largely consistently positive, meaning all the constituents in the sector did really well today. Utilities is one of those sectors that was the most oversold sector and is currently probably in the best position for that short-term trader kind of a bounce thing. If you had to be bullish or bearish on utilities, I think in the ultra short term, you'd have to be a little bit bullish. Tesla a little bit lower here today. It's just normal volatility. Others that stand out to me today, Merck with the big move lower, and AbbVie. There it is. AbbVie back to the 200-day moving average. Healthcare itself didn't have too exciting of a day. It is really extended. This would be another one that if you had to lean into a sector as being short-term bullish, you'd probably do something like that on healthcare. Maybe not the best of charts. I was looking at this. We probably could have done better here, but I wanted to do it this way and try something different. Here is in, we'll start with the blue because that's the most obvious. These are the sectors and the S&P over here that we're talking about what percentage of stocks in a given sector are above the 50-day moving average. Now, there are different numbers of stocks in every sector, some with much more than others. For example, like energy's got like 69 stocks and others have less. So what we're doing is we're saying, all right, we get that there's a difference there. What percentage of stocks in the industrial sector are above the 50-day? And let's compare that to the market and see, are more stocks, how do I want to say this? Is it easier to randomly pick a stock in a sector and have the odds in your side currently that you're probably going to pick a stock that's going higher? That's all I'm trying to show there. Let's bounce back over there. So in the industrials, we talked about this the other day, very close, and the closest sector at hitting its 52-week highs. The majority of stocks are above their 50-day. From there, you have slightly less than half in the, well, we have tech, and then we have consumer discretionary, except I said it backwards. As you work your way down, the S&P has about a third of all stocks above the 50-day. That's getting better, by the way. And then moving on down the list, utilities being one of the most oversold areas, only 13%, financials 19%, and real estate 23%. Healthcare, which we just pointed out a second ago, comes in fourth place, well, I guess fourth from the bottom, at only 23%, and now you know why. That's what the sector's doing. The sector's made up of the grouping of stocks. So the grouping of stocks are largely not too strong right now. They're in sell-off mode. So it'd make it real easy for you to say, let's go like this. Is it Eli Lilly? Nope, nope. Is it Pfizer? Nope. See how quick you can go through the sector and go, well, it's not those. Which stocks are they? Take the sector, sort it by the strongest stocks. You're likely to find what you're looking for there. Now, the other thing that we did, which didn't show too well, this was my fault. Sorry, bouncing around. In the black, we have the 5-day change in the market here, or in the sector. So the last 5 days, you have the industrial sector up 1.15%, and 57% of those stocks did the lifting to get you above the 50-day moving average. The best performer is currently energy. Last 5 days, 2.4%. That does not include today, with a third of the stocks above the 50-day. That is largely due to ExxonMobil and Chevron. They have the biggest weighting inside that sector. So I thought that'd be a fun way to kind of talk about that and show you. Okay. Oh, shoot. I didn't put it on there. But if you were to look at the tech sector, you think it's going higher or lower? About to start a big rally? I don't know. There's a technical pattern that people like to follow. And whenever somebody gets excited about a technical pattern, I like to study it, right? Because the data doesn't lie to you. So the 50-day moving average is currently crossing above and has crossed above the 200-day moving average, known as a golden cross. I'm about to share the data here with you, and I'll go through it. We won't let it scare you. But a lot of technical traders look at that and they say, that's a bullish scenario. There are more times you're going to be profitable than not. That may be true, but is it really an event that you should commit to? Well, we studied it here, and let's take a look and see what we have. Is the golden cross a golden opportunity? Okay, it's a 3-bar chart. Here's what we have. All crosses of any moving average going above or below. We don't care. We just want to know what's going on there. Then we have in red the golden cross, the 50-day crossing above the 200-day moving average. Note, it does not have to be a rising 200-day moving average. Then we said just any average 1-week period, any average monthly period, 3 months, 6 months, and a year. Just randomly, if you were to just buy the tech sector, what would you be up or down 1 month later? All right, so here we go. I'm going to focus on the golden cross here for a second. 1 week after the 50-day crosses above the 200-day, it technically outperforms any other crossing of a moving average. That's where people get stuck. They look at that and say, that's a winner right there. Let's do it. However, it does not outperform, and it slightly outperforms a random selection of the tech sector. Meaning, I'm not going to time the market, man. It's just horrible. You shouldn't do it. I don't like it. It currently outperforms, but that's only 1 week. Who's doing this for 1 week? And so far, by the way, it's almost, well, it's on its way anyways, to doing exactly this, ever so slightly, not by much. However, if we look farther in time, which is typically what people do when they're using the 50 and the 200-day, they're saying in the midterm, not 1 week, but in the midterm, I feel like that's a sign that the tech sector is going higher. Well, if you did that, you'd actually be kind of wrong. So over the 1 month period, buying or trading the golden cross, as they call it, would yield you about 0.68% on average. You could make more money by playing every single crossing of a moving average. Just get in. Just do it either way, right? You'd actually make a slightly higher return. However, you'd make the highest return by just buying it when you feel like you want to buy it. 1 month average gain there, 1.17%. Now, as you go through here, 3 months later, you're underperforming by doing that golden cross. Doesn't mean it's not positive on an average basis. It just means that you could play all crosses, or you could just play in general in the tech sector and do better than the people that sit around and wait to time it. This is not an argument against timing the market. It's just this strategy, right? 6 months later, okay, it's fine, but it's still not outperforming all crosses or just investing like dollar cost averaging or something. And 1 year later is the only time that we could find. Well, to be fair, we only looked 1 year out to 1 year, but that's the only time where you find that if you sat around and you waited for that 50-day to cross above the 200-day and you struck at that point, 1 year later, you'd be better off than dollar cost averaging essentially, or playing every single cross that there is. So the moral of the story there is it's not really in your favor to put that in your bag of tricks, at least for the tech sector, for golden crosses. So that's your lesson, and hopefully that helps. Hey, the Jazz After Dark last night. I'm sorry, tonight. Is it tonight? Yeah, it does depend on which one. Yes. The changes in the market, that was last night, right? All the stocks moving to different sectors? Last night. Okay. All right. So last night, if you want to check it out, I go through the whole thing, but I want to share this here with you real quick. There are changes coming in the market. They start next week, actually, and I very quickly went through all of these to show you how ADP, Paychex, and Broadridge are moving over to industrials. Visa, MasterCard, PayPal, and others moving over to financials from the tech sector. Target, Dollar General, Dollar Tree moving to consumer staples. I went into greater detail to explain to you guys what that means for you and what that means for mutual funds and ETFs. What type of adjustments are they going to make? How many dollars are going to get sucked out of one sector and put into another? And how that changes the performance in the S&P. So I took what, could be really complicated, and hopefully you find that I made that really simple and easy for you to understand. I hope you will check it out. All right, what else do we have? Great classes. Our wine and wealth classes have been great. We've got this week off, so there'll be no wine and wealth class, but we've done covered calls. We did an orientation for new clients, the tax advantages and disadvantage of having a joint account versus a brokerage account as far as, transfer on death is considered, return on capital, just so many good things there for our clients. We do every Thursday, aside from this one, sorry. But that's hopefully something you'll check out if you're a new client. And if you've been thinking about joining us, hopefully you'll join us. Okay, stocks in the news. Casey's. Right? I've been wrong on all these, by the way, or the stats have been wrong. I would have honestly bet in the other direction. So Casey's reports their earnings down 7 of the last 8 quarters. It broke the streak, man. It broke it. So nice little gain there. For Casey's, better than expected earnings. They saw their store sales growing by more than what was anticipated. So if you don't want to read through a whole earnings thing, that's essentially what drove the ball forward. Boeing says we're about ready to sell a bunch of 737 MAXs to Japan Airlines. Remember a couple of years ago, they said we will never buy Boeing again. Okay. Tesla just lowered the prices of their Model Y and Model S and X, I'm sorry. And we said, well, Ford, remember last time Ford lowered their prices and they matched up on the Mach-E, that Mustang Mach-E. They did it, but in China. So Ford says, we're thinking about discounting the Mach-E by $5,700 in China. So, sorry, U.S., you don't get it. But so it's kind of a match there in a way. Occidental Petroleum says, big middle finger to the government. We're buying $350 million more in shares. Share buybacks are a good thing. Stock was higher on that news. We all know the thing there. Not so good for United Foods. This was a kitchen sink earnings report. Missed on earnings, missed on sales, like by a mile. And they lowered their guidance going forward. They just said every bad thing you can possibly say just to get this all out of the way. And that cost shareholders about 30%. Kind of a rough one there, if you want to know. We have stocks tomorrow reporting earnings. BJ's Wholesale, JD.com, China company. DocuSign, The Gap, Oracle, Ulta Salons, and Vail Mountain Resorts, which Vail Mountain Resorts and JD.com are the best performers historically on earnings there, meaning being positive on the day of earnings. You also have, oh, hey, guess what? So Fair Isaac, FICO, is taking the place of Lumentum. You can see why. On the 20th. So, meaning they're taking the place of Lumen in the S&P 500. Just saw that pop up, actually. More Fed speak tomorrow, but the Fed speak was revolving around crypto at a conference, so it's not really something we'll be talking about rates. And like I said, Jazz After Dark last night, the changes coming to the major sectors of the S&P and others. We'll go over that. And then the Jazz After Dark here tonight is a really interesting and visual lesson on why the market will continue on a forward basis to struggle to find buyers. Not my opinion. We're going to actually share the data with you and kind of show why people are saying, I won't invest in the market. Right? It's better off if I don't at this point. And so you can actually see that money moving. We'll go over that. We've done when to take Social Security early, 100% odds of a recession and why, 4 different tips you can do to smooth out your retirement plan, how we're investing $250, now almost $300 million, so you can get an idea of that. And then I ranted a little bit about why it's okay to borrow from your 401k. What does it mean? How does it work? So hopefully you're enjoying those Jazz After Darks. I am. I sure am. Let's see if I can take your questions, and then I do got to get out of here. So I will pop this guy out. All is working good. And 3M, did it make it down? You know, I didn't look. Oh, close. Yeah, it's trying. It likes that low there, huh? I think someone was shooting for 105. You got 106.70. Looks like a good buy so far. Nice. Yep. Evergrande, yeah, that just went away, Chris, right? Like, that's still a thing that's happening over there. I like to follow that stuff, but yeah, that's still going on. There's still very much a lot of trouble over there, but we're just not going to talk about that. Interesting. Are there countries that have a strong correlation to the U.S. going into a recession? They usually go into one too. That's a good question. I haven't done that. I don't know. So I know why I wouldn't have done that, just because it wouldn't have been relevant to anything I was working on, but that's curiously interesting. I don't know, but I would be interested in playing with that. Can you get a when is Powell talking to people alert so they can short some stuff? Yeah, I came across a study the other day where, unfortunately, when he talks, he has the worst performance. Going back to, if you include all political members, his performance is worse on a day-to-day basis, is worse than George Bush, the second George Bush. It used to be a joke. When George Bush was getting ready to start talking, all the traders, we'd all start shorting because the markets would just fall apart when he was talking. It was not a lot of good things to say back then. I mean, he did what he had to do, but yeah, I saw that. Hey, Dustin, what's your opinion on chips for a while? Chips are my favorite food, to be honest. Yeah, really anything else doesn't move the needle, man. The candy, you can have it. If I can have chips, you can take anything. Water, I don't need that. I think there's need for a pullback or upgrades to the government. Well, you're definitely in an overbought scenario in the short term. So very bullish. I mean, I would be very bullish on semiconductors with everything that's going on and all the helicopter money that's being thrown at them in the U.S. here anyways. I would be bullish on it. However, not at this very, very moment. I find it very hard to chase semiconductors at this moment. Yep. But yeah, we do have them in the stores here, not as much as, as you start moving up north. I don't know what their deal is, but we don't get a lot of Utz brand chips around here. Never met a chip I didn't like, but unfortunately I don't get to try those often. Have I met a chip I didn't? No. Any chip you just don't like, you wouldn't eat, assuming it's like a cheat day and you can eat whatever you want.
Flavor or brand?
Doesn't matter.
Sour
Potato
cream and
chip.
onion, vinegar, those are all gross.
No, like you go down the chip aisle and you say, absolutely not. I would rather have no chips than eat that chip.
The vinegar ones.
Salt and vinegar?
Those are gross.
I disagree.
Really?
I like salt and vinegar chips, yeah. Because I can't eat a lot of them.
Sour cream and onion?
Not my first choice, not even my 10th choice, but I wouldn't pass them up if that's all that we had. Yep.
Gross.
Yep, I would still eat them. That's it. Cody's not much of a chip guy, so that was probably the wrong guy to ask. Kevin, what are you talking about over there? Chip? Straight up tortilla chip, like plain with salt on it? It's okay. Salsa guy? Okay, that's true. I'm not there's salsas that I wouldn't go for. That's right. Just straight up chip. My man. Okay. Hey, the more you know. You know what I mean? Now you know a little bit more about us here. That's how you know I have nothing else to say for the day. So I'm going to wrap it up there. Again, no show tomorrow. I do appreciate you guys watching and learning and everything. Feel free to scroll back and learn from the archives. There's lots of good stuff there. I have to get on out of here. You enjoy the rest of your day and the rest of your week. Adios.